Hello there. I hope you're doing good and welcome to lesson 7. In this lesson, we are going to simply just talk about a few things, getting you ready for what getting you ready for our trading concept. So the whole basis is just making you sure that you are trading with logic. You're actually making reasonable decisions whenever you're trading. You actually know what you're doing, and you're actually always on the right side. You're not being caught up in the game, like being buying in a bullish in a bearish, or maybe selling in a bullish. We just want to teach you like how to think like the big banks, trade like the big banks, always be on the correct side whenever you're trading. That's what we're going to look at in this lesson. So don't take anything that I've actually taught you for granted, because it's going to play out. It's going to come together as we go along. So make sure you are actually um, practicing everything. You're actually taking notes. You're actually making research on your own, because all these things are going to play out. So if you miss a certain component, your puzzle is going to be incomplete. So the whole concept uh, of our trading approach is what we uh, just a reminder. Remember, we said that in forex there are so many people that are actually trading, right? Like we have so many participants. We have the big banks, the brokers, we have retail traders, investors, different people, and then we have retailer traders, which is you and me. So in this case, most retailer traders tend to make mistakes, tend to always be caught up in the long side of the market, whereby they just make complications of they don't know when to buy and when to sell, even if they know when to buy or when to sell. But the big banks always have the direction. Okay, why? Because the big banks always have a lot of money. Remember, the market the market moves based on two things, I mean a few things, which is the first thing is uh, demand and supply, right? Demand and supply. And then the second thing is what we call speculations. Yeah, speculations. And sometimes the market is moved by fundamentals or world news. Okay, so you know the banks always know the direction. Before we know that the market is going up or is going down, the banks already know. They know when to invest their money. They know what prices. Remember, I say pay attention to the price and pay attention to the time. Okay, time and price is very important. The candlesticks are there, yes. You're going to see, you're going to read different candles and all that, but pay attention to price, pay attention to time, because that's what mostly the banks are looking at. They're looking for the right time to buy, and they're looking for the perfect price to buy. Okay, so um, um, so having said that, we want to also teach you the same thing, so that you can also be looking at the charts in the same perspective. You have to be looking at the charts like the big banks, like the banks themselves, so that you should always be aware of what is happening in the market. So the way of how we trade is what is called interbank price delivery algorithm. I don't know if that's the correct spelling for, yeah, but this is actually what we are going to be using as we are trading. This is the mindset that we need to instill in our minds. We're going to be using the interbanks price delivery algorithm, or in short, it's called IPDA. IPDA. So if you're going to master this this marketing approach. Like if you're going to master the algorithm of the interbanks or the algorithm of the banks, I guarantee you that that's gonna be your turning point. That's gonna be your change. Um, that's gonna be your game changer, because you're always gonna be trending like the big banks. So um having said that, I don't want to spend I don't want to take much time on this on these lessons, because time is not always on our side. So I have an assignment for you. I want you guys to focus on these things, to make a research about these things before we dive deep into our lessons. So I want you to look at what mitigation is and what liquidity is. Okay, these things are very important. I want you to make a research about them so that you can actually um, um, understand what we are talking about, because these are the most um, common terms that you're going to meet almost every time. So make sure that okay, let me just also add another thing so that you can, I don't know if it's like that or if it's like this, I don't know. You will make a research on your own, you find out. Yeah, order block. Okay, so let me just move this. Yeah, make a research about these two things, and make sure you do it as soon as possible, because as we get along, as we go along, it's gonna be like we're done with the fundamentals, we're done with the basics. That was just a child play. If we don't know what forex is all about, but now this is the this is the real game, this is the real thing that you need to know. Okay, so you need to know that what I'm going to teach you is something that's very important. Please pay attention as I repeat, and always it needs you to be consistent. Like you need to pay so much attention. You need to practice a lot. You need to always make sure that things are always on point. Okay, don't just think this thing is gonna play out on its own without you being consistent, without you trying them on the market, without you giving it time, practicing, and all that. Okay, so remember, I'm pretty sure you must have chosen your favorite pairs, things that you want to look at on a daily basis. And if that has been done, then that's good. That's good. Okay. So otherwise, this marks the end of um, the lesson 7. So now let's get into part B, which is the 2.0. So guys, if you're watching this video, I must congratulate you for finishing the first for finishing FX Black Cloud 1.0 course, and we're actually going into the FX Black Cloud 2.0. Okay, so yeah, have a good day, have a good time.